Imagine two people walk into the same bank, same day, asking for the exact same loan. Same income. Same job. Same amount requested. One of them walks out with a 4% interest rate and a handshake. The other gets 14% or the door. The only difference? 3 digits on a screen. Your credit score is not just a number. It's a financial reputation score that follows you everywhere: your mortgage, your car, your apartment, sometimes even your job. And the wild part? Most people have no idea how fast it can actually change. Here's the mistake almost everyone makes. They think credit is something that takes years to fix. Decades, even. So they don't touch it. They avoid looking at it the way you avoid checking your bank account after a bad weekend. They tell themselves, "I'll deal with it eventually." But eventually costs you thousands of dollars in extra interest every single year. The truth is, credit scores are not like reputations in real life: slow to build, slow to repair. They're more like a live scoreboard. And the game has rules. Very specific rules. Once you understand them, 90 days is more than enough time to make a serious move. So how does the score actually work? Think of your credit score like a report card with 5 subjects. But not all subjects are weighted equally. The biggest one, 35% of your score, is payment history. Did you pay your bills on time? This is the teacher who never forgets anything. The second biggest, 30%, is credit utilization. That's how much of your available credit limit you're actually using. If your limit is $10,000 and you're carrying $9,000 in debt, lenders see that as a red flag. Think of it like a gas gauge. Lenders get nervous when you're always running on empty. Then you have length of credit history, credit mix, and new inquiries, smaller pieces, but they still count. Here's the insight most people miss: 2 of those 5 categories can move fast. Utilization and payment history respond quickly. And those 2 together control 65% of your score. Now here's where psychology comes in. There's a well-documented bias called present bias, the human tendency to prioritize what feels urgent right now over what matters long-term. We pay for streaming services without blinking, but ignore a $25 minimum payment that's quietly tanking our score. It's not that people are irresponsible. It's that the consequences feel invisible until they're not. The bank rejection. The apartment you didn't get. The loan with the brutal interest rate. Those moments feel sudden, but they were built slowly, one ignored bill at a time. The people who hit 800+ scores don't have superhuman discipline. They just set up systems that remove the decision entirely. Autopay for minimums. Alerts when utilization creeps past 20%. A habit of checking their score monthly the way you check the weather. They turned good credit behavior into something automatic so their future self doesn't have to rely on their motivated self. So what do you actually do? Start here, pull your free credit report. Look for errors. About 1 in 5 reports has a mistake serious enough to affect your score. Dispute it. Next, get your utilization below 30%. If you can get it under 10%, even better. Pay down the cards closest to their limit first. Set every account to autopay, even if it's just the minimum. One missed payment can drop your score by 100 points overnight. And stop applying for new credit right now. Every hard inquiry chips away a few points. Do those things consistently for 90 days and the scoreboard starts moving? Your credit score isn't a judgment of your worth as a person, but it is a signal to the financial world about how you manage what you have. And the beautiful irony is this: the people who understand the system don't stress about credit. They engineer it. 3 digits. 90 days. The rules haven't changed, but now you know how to play. Script by Finance Orbit, Finance and Money Psychology Series.